So the beauty of this cycle is that considering the average lifespan of human being, this cycle comes 3 to 4 times, and if you take the advantage of this cycle, you will be able to compound much better than even 30% what we had discussed. Much higher than that. Even though your stock selection may go wrong, then also if you follow this market cycle, you will make superior returns. So when I entered into the market first time, 2006 ends, somewhere out here I was. And I've never seen market falling. Yeah, in a day or two market does fall, but a big fall like 10%, 15%, it did not see at all. In fact, market used to explode. Every day was firecrackers in the market. Just like Bitcoin, how the price shot up suddenly, exponentially. Like that, the market kept on moving higher, 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 multiplied by money by 2007 and 8. That's where I told you there's no other business that one has to do, only stock market, that's all. That was the overconfidence. And it's not only me, the entire public made it, but I knew only about me. I thought only my stock selection
But
is working, but almost every stock was rising. Yes, please.
sir, may I know where are we right now in this market
I,
cycle?
I'll come back to that point.
Okay, sir.
Huh. So the mistake I did is not having knowledge about the market and all that time. I thought again it will go like this. Market only goes like that, like that, like that, and it will touch the roof. My target was set that okay, 1 crore if I make, then maybe I'll book profit. Very ambitious, overconfident. And then what happened is a sudden fall had come. That already I got panicked and most of my positions got clear. But the mistake what I did is I re-entered the market when this rise came again. Somewhere again here I entered. Thinking that array market that fall is only temporary, again it will rise like this. But this fall has totally devastated me. I did not sell, I kept on buying like an idiot. Only thing is lack of knowledge. Though my father continuously warned me, market is not that easy to understand. If you have seen this, be ready to see this also, is what he used to say. But I thought, okay, that time may come when there is problem. The only thing I was thinking is, problem is in America, why India is suffering? Problem is in America, why India has to suffer? And then that entire big loss what came, I never entered into the market. Then somewhere again here I entered it. So if you see from 2008, we have we are somewhere here. After the post market crash 2008-9 recession, market has been rising steadily. We haven't seen a big rise at all. Then we had seen a major sell off due to COVID. Now we are somewhere at this point, guys, and I must tell you, you are the most lucky ones to again enter the market, even better than the position what I entered first time. Two advantages you are having. You are getting a better positioning because the worst is already over. And secondly, you would be enjoying this entire phase of growth. At the same time, you'll also know when to exit. Those points will come now. So you don't have to wait for several years for the markets to take off. Market is already in the takeoff mode. The best phase of the market, the best and the best phase, which is maturity phase, is about to come. Get ready. Your job is just to buy and remain invested till this signal will come that we have reached the extreme, we are about to make the top. And once that you exit here at the top, where will you put your money? That's the big question, right? We will put money in some other asset. I'll tell you which asset. Where we will be at this point in that asset. Then what will happen? That asset will also have this figure. Again we'll exit. Then we'll again park our money in other asset which is somewhere out here at this juncture. Like this only you'll be able to compound your money with the maximum returns in the shortest time. What are the assets? Gold, silver, real estate, crypto, stock market. These are the four broad assets we have. If you want, you can note down this point. Four major assets. Let's say five major asset classes, not four. It is actually four, but why I want to say five, I'll tell you. So equity, gold, silver, both are like brothers. If gold moves, silver also moves. Real estate, crypto, crypto asset class has come recently. Bonds, bonds or fixed deposits. Every asset class will follow this cycle. And all the common between all of this is inflation. Everything is happening because of inflation. If you ask me, sir, will this cycle come again and again? Yes, it will come. See, there may be n number of reasons for this market fall. There may be n number of reasons for this bear trap. This time it was COVID, next time it may be, this time again it is Ukraine and Russian war, next time it could be China, Taiwan, or it could be some other pandemic, or it could be some other crisis like Lehman crisis. Then again, this could be a big fall, maybe world recession, or maybe political instability. There will be a number of reasons, or economic saturation, or job crisis, labor crisis. So, previously, like we had because of Harshad Mehta. Now again, Harshad Mehta scam was this fall, not this fall. Why? Because this fall is global. This could be local, maybe global, maybe local. These points will be more clear when I take the subject in detail. But for now, keep in mind, a small fall will come in order to trap the people that this fall is like this. See, market, I told you, even 10-15 years of experience is not sufficient. So what will happen is when this fall had come, like example, COVID time, those who had well knowledge but not complete knowledge were thinking that this is the time. Alright, let us get out before we see this. So a lot of people got exited here thinking that this fall is going to go like this in this pattern. Because whomever that I was speaking, that fear was there among the people. Arey, no stock market, what are you saying, man? The world is under lockdown. Banks are under crisis. People are not able to pay loan. A lot of people are committing suicide. This pandemic will ruin the world. Crores of people dying. But always understand why I was confident that this is not going to be this big fall. In fact, this fall is going to recover very fast. Why I was confident of it is all because this big fall will come not because of any kind of events like pandemic and all. It only comes because of economic saturation, because of recession, long-term recession. We are expecting a recession in America. I am telling you, like this one fall, not that deep, but again, see, this is not as smooth as you see here. This is all waves. This is a zoom out chart. Don't think market is so smooth that every day it will rise. Huh? Even from here till here, lot of times market falls by 5%, 7%, then it goes. Everything is like this in waves internally when you see. That is why it is not so easy to stand. At every 5% fall, you will get a feeling, sir, is this one? Next time again 5% fall, sir, is this one? I am telling you very clearly, this big fall will come because of macroeconomic factor, and that is only when there is economic saturation. That means from here till here, first of all, companies have to grow like anything. Companies are not growing, they are just recovering from pandemic. So even though there may be a talk about recession and all that, only one question has to pop up in your mind, that we haven't seen a growth in the economy. What is the recession here? So that is only going to be a temporary phenomena, which may come in the next 3 to 4 months. Be prepared for a minor fall in the market. But again, that minor fall, the recovery will also be so sharp. We have to go here. And what is that I'm expecting Nifty here? Nifty, we are right now at 17,800 somewhere. I'm expecting the price to be minimum 35,000. If index is rising by 35,000, I told you that the portfolio or the selected stocks will rise double than that. There is a chance to multiply your money by 4 times in the next 4 years. I'm being very conservative. Maybe much more than that. But advantage would be that 4 times money what you have made if you exit it at a perfect point and you park your money into some other asset class, then that 4 times becomes another 4 times. Like this only we are going to compound. You start with a low amount, no problem, but only maintain a discipline that this money you have given it to the market. You are not going to withdraw even a rupee. Compound it, compound it, compound it. Don't leverage. You have put 1 lakh, run with 1 lakh only. Don't think about making 1 crore in 3-4 years. Slowly and steadily, we will go there. We will reach to that big figure, but give time. I've got a lot of students who ask me, sir, is there any possibility to make 10% per month in market? Lot of students ask me this question before the training. So what should be our expectation from the market? At least can we make 1% every day? At least can we make 10-20% every month? I asked them one question, who is the richest person who has made the maximum money in the market? They know Warren Buffett, everybody says. I say India, Rakesh Jhunjhunwala. I asked them how much they make, They are making only 3% per month, less than 3% per month. If you think that you can make 10%, that means you can create 3 times more wealth than them. Those people who have spent 50-60 years in the market, if they are not able to make that return, how can we make? So keep in mind that it is not possible to make 10-20% a month. No. If you make it, you will lose also in the same way. That is only gambling then. Your companies are not growing with that speed. How will you grow? Yes, selected stocks and all may, like the stock what I recommended, has given 10% return per month. But every time it will not come like that. Average out, I told you, 30% should be your expectation. We are going to make much more than that. But I want you to be conservative. You expect 30%, you get 60% is good. Expect only 30% and follow the system. Because only when you are like that, you won't get influenced by becoming rich very fast. In market, you will become super rich, but only slowly and steadily, like a tortoise, not like a rabbit. In real life, you can be like a rabbit, but in market investing, you have to be like a tortoise. When you have so much of patience to wait for your mutual funds to grow, you are doing SIP for 10 years, 20 years, 30 years. Why not for your portfolio? I assure you, you will make much more than mutual fund also. But how much patience you are showing there, that much patience you show here also. Some of my stock, they do not rise for 3 months, 6 months also. But suddenly when they rise in 2 months, they will become double, triple, 4 times. Because that trigger has to come. We are buying already at a base level. But from base to reach to the high level, it may take some time. How much time it takes, that much rise will also come. Like a bamboo tree. To grow a bamboo tree, lot of patience is required, because for 5 years you do not see any growth in bamboo tree, You keep on nourishing it, nourishing it, nourishing it. 5 years, no result. Next 2 years, full result. That is how even investing is. That is why if you type in Google bamboo tree investing, you'll find lot of books on it. Because it is, investment is like that. That golden phase, you have to wait for that golden phase. People who entered here, like say the big tycoons, they also are aware of this cycle. So Warren Buffett and all that, when they have entered here, they are very well sure that it is going to take lot of time for them to reach from here to here. That guy with 80 plus years of age, if he has patience, why not we? We are young blood after all. Charlie Munger, his partner, if he has patience, then why not we? Patience is must. Wait for that golden time, it will come. Without this coming, this will not come. Keep this point in mind. Without this thing, this will never come. This may come, again this will come. That means sharp V-shaped recovery in the market will come every time there is a bad news. Keep this point in mind now. Let us put that in double quotes. Very important quotation. big crash does not come before euphoria. That means first of all market has to rise like anything, not just rise like 10-15%. It has to grow with the maximum speed. Only then the accident will happen. Otherwise everything else is a minor accident. Every other news, if the market falls, it could be anything. Huh? It could be again a severe war conditions getting severe between Ukraine and Russia, or maybe China also getting involved in war with Taiwan. Maybe North Korea again getting in war with some neighboring countries. N number of news may come between our journey from here to here. N number of news will come. Market will fall, but it will recover with that speed. What is the difference between market fall and market crash? When market falls, that means you give one punch to the market will get more strength to rise with double the speed. That means market behaves like a V shape. Sharper the fall, sharper is the rise. That is called as a market fall. Like here, this is a market fall. But market crash means after it falls down, it takes so many years to get back to that high point. So many years. That is market crash. So market crash will come once in a 2 decades approximately. But market falls will come every 4-6 months. So firstly understand the difference between market fall and market crash. And half knowledge people, every time market falls, they think that it is a crash. Like right now I am seeing there is a lot of fear among the public that America is going to get a recession, America is going to get a recession. Let the recession come in the world. That is going to be a short-lived one. Maybe we'll fall 5%, 10%, 15%. I do not know the quantum of fall, but yes, this much I can say that how much we fall, that much we will rise, and that too with the shortest time. India will grow by double digits. Our per capita income will grow by at least 40-50%. Modi will come back into power again in year 2024. Like that, all the series of good news will come for the market to come here. N number of good news will come. N number of bad news will also come. But the bad news reaction will be smaller, good news reaction will be bigger. That strength market will hold. I am preparing you everything now itself because all these points will come like a recording when you are into the market. Right now your mind is set, yes sir said we should not be selling the stocks even in the fall. But I am telling you, your heart will say that fear will be there. Maybe sir is wrong. Maybe this has come. So that's why I am giving you in the notes. Any time that you are confused in the market, either contact me or read the notes. This is Bible of investing. Every point, every word is important here. Lifelong it is going to be useful to you. Any commodity, any stock market globally that you are trading. Maybe going forward we will be investing in some other markets. Because global investing is opening up. They have already launched an exchange. NSE itself has launched it. International Exchange. IEX. So INX. Sooner that will come in mainstream. That means with the Demat account, you will be able to buy the shares of any company in the world. So maybe some company we like from Brazil looks better than India, we would invest there. But this cycle is not just specific to India, it is global. This could be specific to local, it could be global. But this is always global. That economic saturation is not just pertains to India, to entire globe. And this is natural, like we get winter, we get summer, we get rainy season, like that. This is also season. It is not in your hands or my hands or any big economist hands. They have to face it. Good times will come, bad times will come. We have day, we have night. Alright, so someone has written very beautifully about the stock market. I do not remember the author name. He says that everything is cyclic in nature. Everything, the world itself is cyclic. Round cycle, round cycle. That is how the entire universe is also made. That is why what goes away comes back. Even karma he has defined in that way, and he compares everything, the real life, everything with the stock market, because this is an economy, and that natural demand and supply of the economy is again an autopilot basis. That means even if there is no RBI governor, there is no federal bank governor, that means world's biggest economies, if they are not working, also this cycle will follow. No decision is made, everything is running on autopilot basis, then also this cycle will follow. Because he said that during 16th century, 15th century, that time hardly there was any RBI governor and all, and the kingdom, the kings and all were not at all involved in any economic activity. But then also this cycle used to get followed. So that's the beauty of this cycle. It's just like saying 4 seasons that we have, they have to be there. Maybe in some season the say rainy season, the rains may be less, but rainy season is a rainy season. You can't change that. Or maybe the rains are more. Maybe during winter it will be more chilling. It will be less chilling. But only after winter, what we get is summer. Only after summer, what we get is rainy season. That order you cannot change. Here also order cannot be changed. So print this in your mind. This graph should be there in your mind, just like how you learn the periodic table. This is a graph for the stock market. Much easy to remember compared to periodic table. Alright, now let us discuss one by one each of this phase. You yourself will know why these things happen. Starting with the pessimism phase. Every phase, roughly the range I have defined here in years. The cycle duration on an average is between 15 to 25 years. According to Sir John Templeton, market has got 4 phases. Pessimism, I marked it red because you will not be able to make money easily here. In fact, a lot of people lose money. This is a phase for 2, 3, 4 years. You will see that market rises, it falls. It rises, it falls. There's lack of strength in the market. Just like gold. Whatever was the price of gold 4 years back, even today it is the same price. Your portfolio will also get jammed. I won't say it will fall severely. It may fall only 10-20% because crash has already come. Post crash, market will take a lot of time to regain strength. So during this phase, if you are there in the equity market, you are just jamming your money. Never jam your money. Always money should be on the work to get that compounding effect. What will we do with that money? We will park it elsewhere. I told you 5 asset classes now. We'll see where to do it, but not stock market. When am I expecting this phase? Only after Nifty goes to 35,000. See, my broader expectation from the market. Nifty goes to 35,000. Now 35,000 may become 34, it may become 36. That time will tell. It may become even 40. But for sure, index is going to give you fantastic return for once, which may end by 2024 or 25 or 26. We do not know. But at least 2 years from here looks very, very bright. Maybe after Modi comes back to power, maybe this may be the scenario which is likely to happen. Time will tell us. 2023, I am expecting government to spend like anything. So till March, this is my broad expectation from the market. If you want, you can note it down. Till March 2023, little uncertainty. Okay. Post that, amazing rise can be expected. First of all, market cycle is supporting. Secondly, if there is political stability, market gives a salute to it. So if Modi comes back to power with clear mandate and all, market will already be in exciting mode. 2023 second half, why I am expecting it to be better? Because government, whatever that they have saved, they will be spending like anything because they want to win the elections again. So the job market will open up, infrastructure, they'll be spending like anything. They'll take loan to invest into business. They will do privatization. So many things they will do it for our country to grow. Money will be just distributed in the hands of the public. Lot of subsidies will come. Lot of farmers will be given the money. So many schemes will come out. So infrastructure huge boom is expected in 2023, right till the election results, maybe 2024 end. Generally, 1 year before the election and post election 1 year, these are the golden phases for any country. And because it is coinciding with the market cycle, so I'm expecting 2023 second half and 2024 to be amazingly well. Then by 2024 end, if we are already come here, if we already reach here, maybe the time of exit will come by 2024 end itself. But if you are somewhere out here only, then maybe 2000. Yes, money. Have you sent it to me? Okay. Hi, my microphone has problem. Not able to talk. Would you please make little bit? Okay. You can do definitely SIP on the stocks also, money. And are you able to see the screen now? Better? Okay. Thank you. Sure, sure. Uh, Now, you can do in fact, doing SIP for the stocks is much better than even mutual fund, honestly speaking. I have invested only 3% in mutual fund, 97% is in stocks because I have confidence in my stocks better than even mutual fund. In mutual fund, what happens? Some fund manager is investing. He is also talented, but he has got strict rules by SEBI. Any company he likes, he should not invest more than 5%. 80% companies should be in large cap, mid cap. He should be investing into IT, he should be investing into metals, he should be investing into healthcare everywhere. That means something he doesn't like, he is forced to invest. I don't like any sector, I won't invest. I like metal sector, I'll invest in metal. I like infrastructure, I'll invest in infra. I like banks, I'll invest in banks. So I have the privilege, I have the liberty to choose my own stocks. I'm not bound by anybody. If I like only 5 stocks, I'll only invest in 5. If that liberty is given to fund manager, then definitely I would have invested more into mutual funds. But doing SIP for your stocks will prove it better than even mutual funds. Only the stock which I am recommending. Again, important point. You yourself will get to know. Post any you'll say, sir, what mutual fund I want to invest in this company only. That's how every company would be. A potential to multiply your money. And margin of safety very huge. Because we'll buy a company which is hardly having any loans, which has got huge cash, the operations are good, into a growth stage, management sound, and then has been a track record of what they say they have achieved it. 5 years track record is what we see. Promoters already holding lot of shares. The demand is much higher than the supply. We generally choose low float stocks. So all that points once we discuss, you yourself will realize that yeah, with this knowledge, investing in stocks will make more sense than even mutual fund. Even then, if you are doing SIP and all, there's no harm. You'll make more than market for sure. If index is rising by 10%, you'll make 12%. Index is rising by 12%, you'll make 15%. Even if it is mutual fund. But maybe your individual stocks can do much better than that. And already you can see my recommendations in the past. In the last 2 years, whatever I recommended in an Excel sheet, put it down. What was Nifty that time and what is the Nifty now? Go into mutual fund in Google and see what was the NAV of the mutual fund 2 years back, what it is now. You'll get an idea how much we could outperform. So 2024 maybe either we reach there, but the chances look very less because in just such a short time markets getting doubled up, chances are less. Then what could be the next trigger? 2028. Either we reach here by 2024 if some extraordinary things happen. Otherwise 2028 where America is going to come into elections is where I see market out here. And then next 2-3 years we will be pulling out every rupee from the market. just before this crash. So that time will tell us. But for now, we can be very assured that till 2024 end, do not have to worry at all. Do not have to worry at all till 2024 end. Even if market is little uncertain till March 2023 because of some small recession or some bad news which may come in the front of either Ukraine, Russia or America. But only it will be a fall, it will not be a crash. How much ever it falls, your maybe portfolio from 1 lakh may become 80,000, but from 80,000 it will grow 1 lakh, 1.2 lakh, 1.4 lakh in no time. That is assured. Alright, now understanding each of the phase. So according to Sir John Templeton, who is the founder of Franklin Templeton Mutual Fund, markets are divided into 4 phases. Now this is not only through his knowledge. The market cycles pattern is observed by every big investor including Warren Buffett and all. But he has defined the market cycle in depth. Otherwise everybody is just giving a topography view that okay, this thing happens, this thing happens. But in detail, every phase, how market behaves, how sector behaves, everything is explained clearly here. So if you are interested in reading about market cycles, no other book, just directly read the Templeton book. I already have it. I'll be sharing you the PDF file links in case you are interested. Pessimism phase stays for 2 to 4 years. There is a bad phase of the market, negative returns can also be expected here. Skepticism phase, moderate returns can be expected. This is the longest phase of the market which we have already passed through. And then comes the maturity phase which we have just entered. So maybe 3 years, maybe 5 years, maybe 7 years. So I expect either 2024 it may end or till all the way till 2028 it may get carried. But whatsoever, one thing is very clear, till 2024 end there is no fear. There shouldn't be any fear. Don't see the market even if it is falling. It falls, it will rise. Like say, good form cricketers. I hope you must have enjoyed the match between India and Pakistan day before yesterday. Virat Kohli, the great man in form, was temporarily out of form. But again he bounced back. That is how the nature of the market is also. When the phase is good, markets may fall for several reasons, but it bounces back stronger than before. With double energy it comes. Because weak people are already out. That is what market wants. The big players want to create fear in you. So that you get out. They don't want you to make that exponential money. When 50% people believe me get out because of that fear. Like during COVID time, a lot of people have already got out. Then again during Ukraine, Russia, a lot of people got out. So market will do its best to throw you out. You should be strong. And that only knowledge will save you. Then comes the euphoria stage where market becomes very volatile. Either it rises by 5%, it falls by 5%, rises by 5%, falls by 5%. This is a signal that something is looking shaky. We get out of it. Initial stages of euphoria is amazing. That is where I created maximum wealth. The last stages of euphoria is very dangerous. Any fall may turn to crash. Keep this point in mind. Any fall in euphoria may turn to crash. One fall will come, it will rise. Second fall will come, it will rise. Third fall will come, again it may rise. Fourth fall will come, market will not rise. That is the end story of the market for this cycle. Then be ready for the next few years. Don't expect a return even like fixed deposit. And we'll put in money in other place where we get much better than what the market could give us. With time, the cycles are getting shorter and shorter. These cycles used to be for 40, 50 years, 600-700 years back. It used to be for 40, 50 years. And gradually, the cycle's length is falling. Maybe by next 3 cycles, this phase will become like only 12 to 15 years. For now, it is average 15 to 25 years. Immediately after crash, so now we are going to discuss about the pessimism phase, the first phase of the market. Immediately after the market crashes falls anywhere between 60 to 80%. Index falls by 60 to 80% in market crash. And suddenly bounces back to normalize at around 50% fall from the peak, though in a single month the net fall is generally maximum 20 to 25%, not more than that. Never the fall has been bigger than this in the history. So do not think that the fall what we are seeing happens in a day or two or in a month. It takes totally 6 months for the fall to happen. That's where I got trapped. I see that market falling, again it rises, falling, again it rises. But it is falling by 10%, rising by 5%, falling by 10%, rising by 5%. That I did not observe. I thought that okay, market is anyway rising now, because we have already seen that in the previous phase. I thought that every phase is the same. There is nothing like four phases. That knowledge only I did not have. So in a month, we never had a fall beyond 25% in the history. So it may take several months for the entire fall to get absorbed. Alright? For 2 to 3 years, very volatile movements can be seen like 20% on either sides, and it consolidates in a broad band and rises to a small level at around 40% of the peak, though the market might still rise compared to bottom, but it is a bear market rally as only indices show little strength, but most of the stocks are like sell on rise. So market may fall severely like 60-80%, then again it will rise, but it will not rise till the top. It will rise only some 10-20% and there it will settle. Then what will happen? 20% it goes down, 20% it goes up. 20% it goes down, 20% goes up. Overall market is not moving anywhere for the next 2-3 years. Your returns on index mutual funds may be lightly negative, but it is not going to be in double digits. So though the market might still, it is not thought though. So though the market may still rise compared to bottom, but it is still a bear market rally as only indices are showing little strength, but most of the stocks are like sell on rise. So even in this fall, if you would want to invest 10-20%, I'll tell you which stocks will do much better than the main market itself. Which sectors are good. FMCG, pharma, they do really well in this phase. We'll discuss about that. Most of the investors might have sold their stocks and leaking their wounds after the recent market crash, almost decided never to invest in market again. In this phase, people lose confidence. Their confidence gets shattered. It feels like end of the world as the market is lackluster since very long time. People hoping for bounce back are now eventually losing the faith, booking losses and promising never to come back to the stock market. But they fail to understand themselves. The market is an addiction. They are bound to come back in the near future when market starts rising and buy expensive. So the general mentality of the retailers, the small investors during this phase is that, array market, those who do not have knowledge, like even I also experience the same thing. Array market is all a game, it is all fraud, it is all playing by the gamblers, all driven by the operators, all big fund managers sucking our money. It is very bad. Never one should invest in market. That is how the feeling will be. Because you have seen 1 month, 2 months, 6 months, 1 year, 2 years, market is not rising, you are losing faith and you are booking losses. Hey, get out of the market here. That's what I did. Get rid of this. Waste of time and waste of money. That's how you get the feeling about the market. But because you are in touch with the market, it is an addiction. You will come back. When market starts rising again. In the next phase, you will come back. So you will buy expensive. You will not buy Nifty at 10,000. You want to buy Nifty at 15,000. I'm expecting Nifty to come nearly 10-12,000 when market crashes from 35,000. Imagine quantum of fall that I'm expecting. You'll be surprised. The number of active novice investors is hardly present. Lot of demat accounts are frozen as they are inactive. Brokers do least turnovers. No one talks about the stock market. Series of bad news relevant to the economy flows in. So during this phase, only bad news will come. Some country defaults, some big bank goes into crisis, Then America is still dealing with the still dealing with the recession, inflation very low, your current account deficit, crude oil prices may be very high, exports are lesser than the imports. Like there's so many n number of news will come. Dollar may be going to 90, 100, we don't know. But the number of new investors, because they have seen that market is not moving for 2 years, 3 years, 4 years, they'll slowly exit. Accounts will get frozen. Demat accounts, no one is logging in. That's why the account gets frozen. No new demat accounts would be showing interest. People would do not want to enter into the market first of all. So series of bad news continuously will flow one after the other. That is how this phase is defined. Post recession, the aftermath of the recession will come here. But always understand, every bad news which is coming, market is getting discounted. Every bad news which is coming, market is getting discounted. So after 2-3 years of this bad news, it is time to think about market again. Time to make a comeback from other asset class, because there you may see a crash in other asset class. All right. Smart investors starts to pour money very slowly. The big investors, fund managers, mutual fund managers, your Warren Buffett kind of people, HNIs, well experienced persons, they slowly start to pour money and keep increasing till the end of pessimism phase, but is not noticeable as the trading volume and turnover is very low at the exchange. The market is still like sell on rise. Warren Buffett and all that. Now, one question that you may get in your mind. So, why doesn't Warren Buffett also enter into the growth phase and then totally exit from the market in a phase? And why should he invest from here? Because the real growth will come from next phase. Why should he be investing in pessimism phase only? See, these guys have got 20 lakh crore, 30 lakh crore, 40 lakh crore rupees. It is not possible for them to buy everything in a single day. They have to buy every day 500 crore, 1000 crore, 500 crore, 1000 crore. Then it will take 2-3 years for them to have a complete purchase. This is another advantage you get. Today, Warren Buffett feels that market may crash next month. He can't exit in 1 month. He has to take 3-4 months to exit his stocks. And like him, there are 1,000 people. But you click a button, that's all. Your all stocks are sold at the market price. If Warren Buffett sells now, that 100 rupees will become 90. His next sale will happen at 90. 90 will become 80. It is not easy for them to sell, guys, because they have huge quantity. That the price, that supply will be very huge. That the price will be falling in their every bunch of stock that they are selling. But our quantities are small. People won't even know that some buying and selling transaction has happened. So for us, I would say that we are in much better position compared to big fund managers like Warren Buffett. Initially, he was getting that advantage. Now he doesn't have it. Because such a huge money doesn't happen to deploy or to take out in a day or two. It may take several months, it may take a year also. Though he knows the outlook is very bad, but yet bit of losses he should have to take it. He may not be able to sell 100%, he may be able to sell 50, 60, 70%, only 30%. He has to brunt. He knows that outlook is very strong. He cannot put all his money. 30-40% will remain cash. He can't do anything about it. That is why 26% is average returns. But for us, because entry, exit, switching the sectors, switching the businesses is very easy because of less capital, we can grow much ahead than the 26% benchmark what he has achieved. The undervalued stocks perform the best in pessimism phase and skepticism phase, while the growth stocks and momentum stocks perform the best in the ending of skepticism phase to euphoria. What is undervalued stock? See, there are two types of stocks. Always remember, there are two types of portfolio, two types of stocks. Companies, I would say. Undervalued and growth. Very important note, in the dull phases of the market, Keep a note of it. Okay, so let's get back to the phases. The defensive sectors, as I told you, very important point again here. The defensive sectors like pharmacy and FMCG are likely to perform better in this phase. Very important note, guys. Post market crash. FMCG stocks means like Britannia, Hindustan, Unilever, then Godrej Industries, not properties. Huh? Godrej Industries, Dabur, Colpal, Colgate Palmolive. These companies are better. So even in case you would want to buy stocks or create portfolio, you will be choosing this sector and pharma sector only. They can do wonders. That means they'll outperform the market. Market falls by 10%, they will rise by 10%. That's how they will behave. I'll be giving you an entire table, year wise, phase wise, which sectors entry, which sectors exit, which sectors entry, which sectors exit. See, something like this. Okay, that's in other slides. I'll show you when that time has come, sector analysis. But for now, the broad point is that pharmacy and FMCG are better compared to any other sector in this phase. Which phase? After market crashes, that phase. Next. The stock market is very cheaply valued. We are going to discuss about PE ratio. PE ratio will help us to know whether any stock or any asset class or whether any sector is overvalued or undervalued. So if you look at the stock market, it will look very undervalued. You may feel like tempting, sir, things look very cheap, let us buy them. But don't believe it, because things will become more cheaper. If it is cheap, it will become more cheaper. Example, say real estate boom comes, then real estate crash comes. 10 lakh plot is available for 8 lakh. You may feel so cheap are 20% only. Wait for it, you will get at 7 lakh also. So don't buy because anything is cheap. Here you have patience to get it more cheaper, because this is not market fall, this is market crash. You will get opportunities to buy. Alright, but in market fall, don't wait for long, buy, that's it. No leverage funding. In this phase, people will not have the guts to take loan and invest. In euphoria stage, they will have. Here, people will hesitate to take loan from NBFCs. People will hesitate to even borrow money from their friends to invest in the market, because market has already shown you a horror show. Falling 60% is no joke. The metals and other commodities like coal, crude, that goes as a raw material in the industry, are making new lows because of lack of demand. Stocks relevant to the sectors like steel, coal, oil, power, capital goods, mining are the worst performers. Very important point to keep in mind. Do not even by mistake touch stocks like Tata Steel. You'll say, sir, I like Tata Steel and the price from 1000 rupees has already down to 400 rupees. Let me buy. That 400 rupees, believe me, you may get it for 200, 250 also after 2 years. So 2 years you have wasted in your life and you have lost your capital by 50%. Metals, strictly no, strictly worst phase of the market for metals. Metals and mining. Mining includes your oil mining and everything. Now this point we know and we can follow it. But mutual funds, rule of SEBI, they have to remain invested everywhere. Maybe they can shift weightage. Maybe here they can have 20%, here they can have 20%, but at least 10% they must have here also. That is the problem with the mutual fund. Compliance, compliance, compliance. For everything there is compliance. They can't break the rules. They break it, their license will get suspended. They want that diversification. SEBI says that don't take any risk, be uniform, play everywhere. Otherwise, what will happen? If they also exit, then this will become like, it will crash like anything. People have invested in that, they'll be losing abundantly. That's the reason why the strict rules of SEBI will give a little support, but we don't want to buy because we know that the outlook is grim for that. So this point, again double quotes, every line, every word is important, guys. I don't know whether you are noting it, though I will share these entire notes with you, but still I would want you to note down these important points. Because these all points will come in the next 3, 4, 5 years that you'll see and you'll say, yes sir, things are working exactly as you stated. Then only you'll come out winner. The number of visitors to the stock market based websites are falling consistently over a period of time. If you check the Alexa rank, say Money Control is a very popular site, nsindia.com, bsindia.com, moneycontrol.com, go into Google and type Alexa rank. Alexa rank will tell you the quantum of visitors flow. Which site is popular, which is not popular, which is getting more visitors, which is where the visitors are collapsing. So that graph will tell you that the graph is all bending downwards. That means people are losing interest. And when people are losing interest, we have to plan our purchase. So after 2, 3 years of market crash, we'll make a comeback. When public is exiting, we enter. Because that is what the smart money does. They do exactly opposite of what public does. We should also do the same thing. If there is panic among the crowd, we have to get excited. If there is excitement in the crowd, we have to get panic. Again, a very important point. If the public is excited, it is time to fear, and vice versa. Again, a quote from Warren Buffett. Banks NPS rise. Okay. Yeah. Though the metal stocks trade at a very low PE ratio, but yet they keep falling, sell on rise is a strategy to be applied for the stocks and sector. If you see the metal stocks and all, if you check the valuation will look very undervalued. I told you 1,000 rupees Tata Metals may be available for even 400 rupees. I would still say to sell. Even though it is discounted by 60%, still it is a sell because metals is worst for this phase. The companies will be posting losses. You can keep this point in mind. Thousands of crores of loss will come every quarter on quarter for metal companies like Tata Steel. You will see it. You will observe it during this phase. Forget growth. I am saying losses. I am not even saying the growth reduces. I am saying there are thousands of crores losses there. Banks NPS rise. Banks are also worst hit in this phase. Credit growth falls or remains flat. Metals, banks, both these sectors have to be avoided. In fact, I would say only these two sectors you have to focus. Within this, choose the best stocks. Okay, that's all, guys. It's already time. That's all for today. Let me stop the recording.